I have a fantastic video lined up for you today, full of news, chart reading, key levels, and so much more. Of course, the cheat sheet. And we'll also get into a bit of the attitude that you'll require to be successful inside financial markets. Let's run the numbers. Hi everyone, I'm Ken from Crypto Trading KS and the CTKS method. Our mission is to help everybody gain the skills to secure financial freedom and emotional mastery through trading and investing. Let's go through the markets. Around the world, we can see global markets are somewhat mixed. We have Taiwan's market just taking off. The Nasdaq is doing the same thing. Yet we can see other markets such as Russia, China, Germany, the UK are retracing. Australia is quite neutral at the moment. When markets get uncertain, the first thing that people tend to do is to look towards the news. The unfortunate thing about this, as Austin Goose says, structure overrides the news. Now, what is chart structure? Well, that's just reality. What is the news? That's fear and greed. It's sensationalism. And it's also a lot of opinion. Some markets are more news-sensitive than others, and crypto is a news-sensitive market. But just beware, in news-sensitive markets, the structure is more important, not less important, and I'll show you that coming up. The key to understand, and this can be a game changer for you, most news is reactively reflexive and not predictive. Now, what does that mean? Reactively reflective. It means that news just responds to what's going on and reflects what's going on. It's not predictive. For CTKS structure is. For example, in China, the world's largest bank, ICBC, says Bitcoin solves gold's problems of divisibility, being inconvenient to carry. And there's no doubt about that. Gold is hard to lug around. It's also a problem if you want to pay a fraction of your gold bar. In other news, in the USA, the SEC's chief Crypto Asset Enforcement Division head, David Hirsch, has left the role. Now, what does this mean for crypto? You could assume that David Hirsch leaving is because it's a political issue. But the truth is, after 9 years, people do tend to move around. It's not necessarily the case, as being reported in the crypto space, that David has been booted out for political reasons. To help you to become more of a financial blessing to yourself and those you love, I share wisdom and experience from nearly 4 decades inside financial markets, a particular game changer that you might find really useful. All financial markets, and that is all financial markets, work as one entity, pooling money together from millions of different sources. Those with the required skills and emotional mastery get the profits, and those without emotional mastery and the required skill learn lessons from their losses. There is no zero-sum gain or competition inside financial markets, only learning. And the tricky thing is, financial markets are always changing their character, so there's a lot to learn. One key thing is to just embrace reality as it appears. What are we noticing here with the S&P 500 futures? They're coming up. What about the Nasdaq futures? They're coming up. Russell is just bouncing up, and the Dow is bouncing up as well. All charts are intercorrelated and interconnected. For example, if the Russell 2000 is coming down, that's the small caps inside the US market. Typically, crypto tends to weaken and follow the Russell. This is not always the case, but it is quite a good signal. Now, if the Russell 2000 starts to turn around, we would expect crypto to start to turn around as well. When people first start inside financial markets, they only read charts in isolation. Now, if you're reading a chart in isolation, that's a big problem because you'll miss the interdependency and intercorrelated nature of all markets. All markets work together. What that means is that every chart impacts all other charts. It takes many years to understand this, but I'm bringing it to you because I think it's so vitally important for your future. What is happening at the current time? We can see the VIX has been coming down, but it's starting to go up. When the VIX comes down, we expect the main indices to rally. And we're seeing on the future side at least that the Russell 2000 is starting to come up. This is a really good thing to see. We've also seen that oil has been spiking up. What about bond yields? They've been coming down whilst the dollar has been rallying. A lot of the weakness inside crypto has been caused by the dollar's undeniable rally. And that's really interesting because a lot of people say that the US dollar is doomed. Somebody should tell the US dollar that because it's not got the memo. This is exactly why it's vitally important to look at the reality of the charts. If Bitcoin is coming down and you're invested in Bitcoin, don't fight it, understand it. And we can see gold has been coming down at the current time as well. Gold and Bitcoin are tending to hang out more and more together. If you're liking content like this, please smash that like button and don't forget to subscribe. If you're new to the channel, you may not realize that no alt can escape Bitcoin's gravity. Now, what does this mean? If you focus first on Bitcoin and then your beloved alts, this will lower your risk and increase your probability of profits. The alts have a directional correlation with Bitcoin. For example, this is Bitcoin's chart. As Bitcoin is coming up, what is Ethereum doing? What is Solana doing? What is Binance Coin doing? What is XRP doing? What is Doge doing? What's ADA doing? What is Litecoin doing? It's pretty obvious that they're following directional correlation with Bitcoin. Now, what does that mean? If Bitcoin has come down, what do we expect to happen to ETH? It's supposed to come down. What about Binance Coin? What about Solana? What about XRP? We're noticing a divergence here. That's something that we want to pay attention to. What about Doge? What about ADA? What about Litecoin? The key to understand, Bitcoin has a gravitational pull. If Bitcoin continues to come down, we expect all of the alts to follow. Just notice this. When XRP was going up, it was overextending that upward direction. And what about when Bitcoin came down? It still pulled in alignment. This is a critical thing to understand, and unfortunately not many people do. Financial markets can get really confusing. And how do we unconfuse financial markets? Well, we simply look at CTKS structure. And CTKS structure is rightwards looking. Indicators are leftwards looking. If you were to put on any indicator, it would stop at the current price because they're all statistically based measures that just analyze price and look backwards. However, CTKS structure looks forwards. Now, how do we prove this? If we look at what's happened to Bitcoin in the past 24 hours, it was coming up to that 66,846 level. Structural resistance. If it gets above that and confirms it as support, it's going higher. But if it can't confirm as support, it's going to go lower. First stop, 66,117. Second stop, 65,322. And like Crypto Brett says, trusting the levels, fortunes can be made, and it's absolutely undeniable. Many thanks, Brett, for that very kind comment. Now, another key understanding is that CTKS structure is created by applying two levels of standard certification, Level 1 and Level 2 standard certification, thereby creating the world's most powerful smart money buy and sell level detection system, but you'll see it play out in real time. Let's fast forward to recent price action in Bitcoin. You see that it came up to that 66,846 level and the 67,000 level, but it couldn't confirm it as support. Confirming as support means that you come back, you retest it, and resume up again. This was a failure here, which was pushing it down to the 66,117 mark. And thank you very much to the Meditative Mind for your very kind comment. What you'll find as a game changer, CTKS structure is really easy to read, apply, and understand. And I'll show you how exactly to apply it. Unconsolidated up movements retrace to the next level of structure below. So this is an unconsolidated up movement. I'll just change that color so it's a little bit easier to see. Now, how is it an unconsolidated up movement? Consolidation occurs up and above the last level of structural resistance. If it converts that to structural support and retests and resumes up, it means that it's coming up to the 70,053 mark. If it doesn't confirm its support and if it fails there, it could have consolidated along this 66,8446 or 66,846 level, but it didn't do so. It became weaker and it had negative fresh air, which places a lot of selling momentum inside these structural levels, and that's exactly what they represent. Let's now have a look at Bitcoin's price action. And this is just current price action. At the time of this recording, we can see Bitcoin is currently 65,667. It came up into the 67,000 mark, but couldn't convert that into structural support. It couldn't retest and resume up. It failed there, and it failed at the 66,846 mark. We can see that there was an intention spike down to the 66,117, a negative fresh air gap below 66,846, which said the sellers were in control. A cut under here put this 66,117 in play, and also the 65,322 is in play as well. Now, how do we know when it's going to turn around? We know that things will turn around when we have consolidated down movements. If they retest as support, they're heading up to the next structural level. If they manage to get above and they don't decay below, they're heading up to the next one. But if they don't reconfirm as support, they're going down to the one below. You can see how this always plays out. We had an unconfirmed structural change over here, which meant that the 66,117 level and the 65,322 level were in play. And I've been doing these screenshots just explaining where Bitcoin can go, and you can see that these structural levels play out and are rightwards looking. And that's what you want. You want to know where price could go, not where it's been. To be successful inside financial markets, there's many rules that you have to know. Rule 240 is a particularly good one. When you do your CTKS structure first, you'll understand where the market is headed. This could well be a game changer for you. All market charts are intercorrelated and interconnected. What moves one moves others. Now, what does that mean? What moves one chart will move other charts. And this is something you've got to be aware of. It's like a huge financial jigsaw puzzle. The cheat sheet puts the current state of this jigsaw puzzle together. And thank you to Marbao for your very kind comment, my friend. And thank you to everybody who comments. Please let me know what you would like to learn more, and I'll do my best to put those into the daily videos. Your learning is your earning, so if anything is unclear, please reach out in the comments and let me know. One thing that you'll learn inside financial markets, not all jigsaw pieces are equally weighted. They're not all as important as each other. Some are very important and others not so important at all. We know that CTKS structure is vitally important to understand because it marks up all of price history with 2 levels of standard certification. And we know the price waves, and that was proven with Bitcoin's price. They just move between structural levels. If they're consolidated or not determines where price moves. Now, the most important charts or the most important jigsaw pieces of the financial puzzle are the Tier 1 charts, which are these ones. The Tier 2 seek confirmation and the Tier 3 also. But the Tier 1s are what you really need to know. In fact, we've got a thing called a cheat sheet, which we talk about inside the service, which puts all of these charts on one page and explains the CTKS structure. But it actually does far more than that. I'll show you exactly what the cheat sheet looks like. The cheat sheet always starts off with a specific date and time. You need to know when it was done. Then we have a 30-day percentage price change, and you can see the VIX over the past 30 days was negative. What about this? This is the CTKS path. The CTKS paths are released inside the service, but with Level 2 standard certification, you can draw them yourself. What we can see, let's go to the bit of a summary. The incoming structural resistance is on US oil, the Dow, Apple, Tesla, gold, Bitcoin, Ethereum, Bitcoin Cash, and XRP. Incoming structural support is on the VIX, and that's not actually good. US dollar, dollar-yen combo, that's not good. The US 10-year, the US 2-year, that's not good either. And just mess things up, it's also on copper, the euro dollar, the Nasdaq, the Russell, Total, Ethereum Classic, and ADA. We can see a pretty mixed market at the current time. In the past 24 hours, stable coins were the greatest gainers amongst the top 100. That usually shows that there's been an excessive sell-off. We'll get to that a little bit later. There were massive crypto long liquidations, and we'll look at liquidations a bit later. They're over here. There's mixed economic signals, because we have some things strengthening, some things weakening, and the Empire State Manufacturing Index substantially strengthened, although it's negative. That placed pressure on the DXY, upward price momentum on the DXY, which filters into dollar-yen, the 10-year, and the 2-year. The DXY has been moving opposite to the yields, and that's traditionally not what happens. With the cheat sheet, you can see every single chart from a structural perspective and a path perspective, and a 30-day price change as well. Now let's go through just what all this means. The VIX is starting to move to a consolidation path. That means that there's upward price momentum inside fear. Now let's look at fear and try to understand what's happening there. We can see crypto fear and greed has remained fairly static at 71 for the past 3 days. When we look at the stock market's fear and greed, it's actually improved a little to 42. It was 38 in the past trading session. In the past trading session around the world globally, Russia's market was up, the US market was up, South Africa, France, Germany, Italy, and India were up. What was down were the markets in Canada, China, Japan, Norway, Chile, and Brazil. Nvidia was slightly down in the US market, and Tesla had a gangbuster day, up 5.3%. We can see Tesla is currently on the positive price path, but it's coming into structural resistance. So Tesla may go up and go flat, just something to be aware of. Or it may hit that structural resistance and unconfirm it and move down to a lower level of structural support. We can see the same kind of behavior in Apple. Apple has been going crazy recently, as has Microsoft, and that's pushed the Nasdaq up. But there's quite a lot of fear inside the markets. When we look at the crypto market, total crypto market cap has gone negative, and it's moved from a consolidation path down to a negative path, because Bitcoin could not confirm its structural resistance and flip it to structural support. This is why it's so critically important to note what Bitcoin is doing structurally. ETH has a tremendous amount of structural overhead resistance. While it's positive on the 30-day path, it moved from the consolidation path to the negative path because of all that overhead structural resistance. And of course, the DXY strength and the yield strength, the yields are potentially turning around. They've got a lot of underpinning structural support, and that's going to place positive price momentum on them. There's been $278.5 million worth of total liquidations. The vast majority, $230 million, were long, 48 were short, resulting in 114,661 positions being liquidated. Across the weekend, we typically get low levels of liquidations, and that's what we saw across the weekend. And then they went just gangbusters on liquidating the longs. But so far, we haven't seen billion-dollar liquidations. Please let me know in the comments, where do you think the liquidations are heading in the next 24 hours? At the time the cheat sheet was done, Bitcoin ETF inflows were negative 3 million, and that compares with negative 190 million and negative 226 million. So we've seen a lot of outflows. With Bitcoin's price coming down, we would anticipate that this ETF figure will get more negative. I'm incredibly grateful for all the feedback that people give inside the comments. And Seinsurf said, I've been filling out the form, the daily cheat sheet, and I have many questions on a daily basis. So seeing how you interpret the results is really good to see. Another good thing to notice is how you use the notes section. It would be great to get your analysis now and then, especially when you get divergences. And we're certainly getting divergences right across markets globally. And the thing that we do, we look at everything. We're not like retail. Retail will just go to one chart, the chart that they've put money into, and only look at that. And then just say, what the heck happened? We know what's happening because we do the cheat sheet. We also know that the CTKS structural levels are either strengthening or weakening. One thing, economically, everything is a bit mixed up at the current time. We've seen divergence between Forex and the yields, and gold and silver are all over the place. This is bringing a lot of fear into the main market, whereas crypto is ostensibly very positive. Crypto people are very positive people. But the key is you don't want to be positive and you don't want to be negative. You just want to be knowledgeable. Right now, the best thing that you can do is just keep your eyes on structural support and structural resistance. It's also very useful to note that financial markets are not competitive, they're cooperative. If you have the knowledge and you have emotional mastery, you're going to make profit. It doesn't matter what the markets are doing, you'll do well. It's also really good to move away from the retail mindset. Don't just analyze the charts that you've been putting money into. Don't look at recent indicative price because it will RIP your money. Many people will tell you fairy tales and stories about where price is going. Just look at structure. If you're relying on luck and hope and gambling, you're relying on the wrong things. You want to rely on your knowledge and your emotional mastery. As professionals, this is a professional channel where we look at the market pulse through the cheat sheet. We integrate CTKS structure so we understand what price reality is doing. We know that the news is reactive and it's reflective of current market conditions. Can you imagine a news story which basically says Bitcoin is going to $1 billion while Bitcoin went down 20%? People would say this news outlet doesn't know what it's talking about. Reporters have quickly learned that if you don't reflect current price reality, you won't get many readers. So what happens in that particular scenario? People just create stories and they base everything around recent indicative price. All of this stuff will desynchronize you through with the markets. You don't want that. You want to have three-dimensional risk management. You always want to have positive, negative, and neutral stances. You absolutely want to become your own financial advisor and be utterly independent of the market. You can only do this with high levels of knowledge. Many people would just stop there and just think that it's all a technical issue, but it's not. You actually need a thing called positive excellence. Positive excellence has you focusing on kindness in order to activate your learning. Humility and patience creates profitability. Humility says, hey, the markets are just moving between structural levels. That's it. So if you know those structural levels, you can have inner peace and outer peace. When you make the right calls, you can have gratitude. When you make the wrong calls, you can have learning. It's all about positive excellence. This is so critical, but most people think that it's fluff. Why do they think it's fluff? Please let me know your comments about this. I think it's really important to help people learn how they need emotional mastery to create profitability. I'd be really interested in your comments, be them positive or negative. If you think it's all rubbish, please let me know. I think that's really important to share. And why you think it's rubbish. Or if you think it's really important, well, why do you think it's important as well? I don't often talk about this, but I think it's worthwhile noting many people come from a negative excellence mindset. They feel entitled to get whatever they want to get. If they don't have knowledge, they don't care. They just say, well, I put my money in, I want a return. I don't know what I'm doing, I'm gambling. But that doesn't matter, I just want my return. Financial markets don't work that way. If you've got inner conflict, you'll have outer trouble. Society is really harsh. It doesn't teach people their own unique worth. It says you're only worthwhile if you've got more money than another person. And many people, quite a large percentage of the population, just live in negative excellence. They say, well, I can't get it honestly, so I'll just be dishonest. I'll lie and deceive and just take money. You see it all over the news. Negative excellence is a plague in our society, and if we could stamp it out, that would be fantastic. Negative excellence is always driven by blame, which turns into hatred and revenge. But it all comes from a concept that there's not enough to go around and people are not worthy of success. This is blatantly untrue. Success, money, they always follow doing the right things. There's so many people inside the crypto market that didn't act with integrity and decency. They had negative excellence. They're behind bars now. What you will find over your trading and investing career, inner peace and outer peace, are vitally important to master. You are worthy. Why? Because you're breathing, because you're here. That's enough. That's enough of a reason. You don't need any other reason. Unfortunately, we've moved into an entitled society where respect is just not there. It is disappearing. Why is respect disappearing? Because people who can't show respect don't respect themselves. Now, why am I talking about respect? Because you must respect the markets or the markets will beat you up badly financially. Mastering your emotions is really important. You don't want to give up. So many people are lazy. They're just looking for a quick solution. They don't believe that they can be successful. And guess what? If you truly don't believe you cannot be successful, wow, double negative. If you believe you won't be successful, you will not be successful. You don't want that kind of thinking. Poverty thinking has nothing to do with money. It has to do with the thought that you're simply not worthy of success. You are worthy. And any negative excellence behavior that anybody can eliminate is a good thing. It's a good thing for the person, and it's a good thing for society. Having been inside financial markets for nearly 4 decades, the goal of helping you to secure financial freedom and emotional mastery through trading and investment comes at a cost. You can think of me as your coach. I'm a no BS individual. If you need to do something, I'll just tell you. If you don't like me saying it, okay, that's okay, but I'm doing it for your benefit. And eventually, you'll find that it's all about skills. And why is the mission to help everybody to gain these skills? Because when we help everybody, we're making society better. Can you imagine if people knew positive excellence and had a choice to not go down the negative excellence path? What about when AI and robotics and all of those things that will eliminate work start to hit people's bottom line, starts to hit their pocket? What about the fact that so many people, housing has become unaffordable? Having some extra cash is a really good thing, even if you're safe in your job. And what about your children and their children's children? Are we paving a life where people know more, or they just fit into the system as widgets? If you would like to know more about gaining the skills to secure financial and emotional mastery, please subscribe to the channel and just let me know what you're interested in learning all about. I'm here for you. I want you to succeed. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.